Well, I'm so excited to be back with you again on today. Today we're going to be talking about 3 types of income. How you earn it and where you earn it matters. If you want to keep more money and make more money and elevate your life and be financially free, you don't want to miss this today because we're going to talk to you specifically about these 3 types of income. Well, before I get to it, I want you to do me a favor, subscribe to this channel. Click that notification bell so we'll notify you every time we're putting up this great content, because I want you to help us build a substantial channel here so that we can help many more people. All right, well, today I want to get to this right away. We're talking about 3 types of income, and we're talking about how you earn it and where you earn it matters. Well, let's get into it. All right, so income type number 1 is active income, and it's compensation from employment or actual involvement of a business. It includes wages, salaries, tips, etc. Taxation, which is always going to be important in this video today. Personal taxes range from 10% to 37%. And I want you to understand that that means if you've got a job, your taxes are somewhere between 10 and 37%. Now, in addition to that, there are Social Security taxes, which are 12.4%. The employee pays 50% of that. So that means another 6.2% is coming out of your pay. Then there's Medicare, which is paid by the individual of 1.45%. So as you can see, this type of income can be taxed at a rate of almost 50%. If you are at the higher end of the tax bracket, you could be giving up 50% of your income simply to taxes. This is the most talked about form of income. Remember someone telling you to get a good job and keep it? Remember that type of advice that you've gotten? Well, this is what they're signing you up for. The get a good job and keep it mentality is signing you up to give a lot of your money away in the form of taxation. Number 2 is portfolio income. This is income from investments and includes capital gains, interest, dividends, and royalties. Various types of portfolio income are taxed differently. For instance, capital gains on investment, meaning that I bought an investment and this is what it has gained. If you hold it longer than 12 months, you're taxed at a rate now between 0 and 20%. I want you to see that. The top number is 20%. So if I buy stock, and my stock goes up in value, the most I'm going to be taxed on that income is 20%. Capital gains on investments held less than 12 months are taxed as active income. So if you get it and don't hold it for the 12-month period, it's taxed differently. And that's not as critical and important because people who do like day trading, for instance, they've already figured that number in and they work it because of the amount of income that they're pulling in. So portfolio, again, so we can see this, is not subject to Social Security and Medicare. So the 6.2 and the 1.45, it's not even in portfolio income, which is from investments, capital gains, interest, dividends, and royalties. All right. Capital gains can be offset by losses on other investments. That's another perk. So that if I'm actually investing and I have capital gains from my investment, I can offset it from losses somewhere else. So great accounting can see to it that I'm not paying nowhere near the amount of money that someone with a job is paying. This is why you can see, we've heard stories about Warren Buffett, where Warren Buffett's tax rate was lower than his secretary when he was making billions of dollars a year. And this is because of the benefits that exist based upon where you earn your money from. She had a job, he was an investor, and that's a big difference. So portfolio is clearly better than active because the highest rate is 20%, and even then you have the ability to lessen it by offsetting it with other things. So that's very important. Number 3, passive income. According to IRS, it comes from 2 sources: rental activities or business activities in which you do not materially participate. Let's make this clear. What this means is that if you own rental property, the income from that property would be passive income. Also, if you participate in a limited partnership where you invest in real estate business, your income would be passive. Now, passive income is taxed much lower than active income because you can lower the income to be taxed by the expenses you encounter to make the income. So if you repair or have a property manager pay taxes, insurance, etc. on property, you can lower your taxable income by deducting the expense. It is different from active income because you cannot deduct your personal housing expenses from your active income prior to paying taxes. When you've got a job, you can't say, well, I got a mortgage, I'm deducting that. Well, I got a car note, I'm deducting that. You can't do that. But when you own property, you have the ability. So I've given you the three types of income there. You've got active income, you've got portfolio income, and now we're talking about passive income. Let's go on. So now, major principles that we must consider. Principle number one, the closer you are to where your money is made, the more taxes you pay. I'm going to say that again because you've got to get this inside. The closer you are to where your money is made, the more taxes you pay. So that means distance matters. Active income, you're on a work site. You're actually there. You're working. Now we know now there's hybrid work. There's people working from home. Things have shifted around, but it is considered you're on the clock. You're on the clock. You're there. That's active income. Two, passive income, real estate. You're at another location. The property is somewhere else. It's not where I am. It's somewhere else. Portfolio income. I'm investing in something that's digital. I'm investing in another business. It's stock. It's in another company. It's not where I am. I want you to get this in that literally when they came up with this system, they decided to charge you more if you show up than they charge you if you don't. So you've got to get this in your mind that says, look, I've got to find a way. I've got to find a way to get away from where I make my money. I got to find a way. I'm saying it. I got to find a way to get away from where I make my money. Let's keep going. Why you must learn this principle. The person with the wealthy mindset practices tax avoidance. Now, there's two words that are very important about tax. Tax avoidance, tax evasion. Tax avoidance is a legal action taken to lessen tax liability and maximize after-tax income. Tax evasion is not paying the taxes that are due. But so this is not paying. This is I'm taking legal action to lessen. So when you're wealthy and you've got a wealthy mindset, you're taking every action possible to lessen tax liability. Remember when Donald Trump was running for president in 2016? They talked so much about him running in 2016 because they were saying he paid $750 in taxes or he paid no taxes. And he said he was smart because he learned how to use the tax code to his benefit. He made billions and yet he didn't pay much in taxes. You hear this argued about all the time when it's election time, that the rich don't pay taxes, the big companies aren't paying taxes. Well, the tax laws have been written in such a way that they can legally lessen tax liability and maximize after-tax income because of it. So the goal of a person with a wealthy mindset, that's you, is not to make more money. It's to keep more money. See, the job is going to take 37% if you make a lot of it. It's then going to take 6.2% for Social Security, and then it's going to take 1.45% for Medicare, and it doesn't care. You can't lessen it. But if you learn how to get away from where you make your money, you start getting rewarded by the system by having the ability to use legal means to lessen your tax liability. This is so good and so important. So that's number one. Number two, the closer you are to where the work is done, the less you make. I want you to hear this. What we talked about taxes. Now we're talking about how much money you can make. The closer you are to where the work is done, the less you make. You got to get away from where the work is happening. Why you must learn principle two. The person with the wealthy mindset is not paid by how hard they work, but for the asset they are to the company or the wisdom to invest in it. At this level, your ability to see and understand the big picture picture gets you paid. Employees are trained to see their piece, but portfolio and passive income people are trained to see big picture. I'll give you an example. Imagine you're the kitchen worker versus the restaurant owner. Well, the kitchen worker is right where the work is being done. The owner may not even be in the building. Let's look at the basketball player who's on the court, going up and down the court. In our system, we watch the NBA and we say, man, big contracts. But what about the owner who's never on the court unless the game is over? He's making way more money than the guy playing. You've got to understand where the work is done, you make less money. What about the Apple employee versus the Apple investor? The Apple employee is showing up every day. They got income and that income is being taxed. The investor, though, is portfolio. I'm an Apple investor. I've been an Apple investor for years and years and years. The investor has their income, but it's not income from work. So it's not being taxed as though I am where it's happening. Let's keep going. Principle number 3, the person who lacks knowledge is the servant of the one who has it. Investing in yourself will be your greatest investment. Learn the stock game, the real estate game. Invest in yourself and your skills. So let's get clarification. Do you really want it? You have to be willing to invest your extra time pushing towards it. You got to find time to pick up materials that talk about portfolio and passive income. You got to get out of active income. Work to invest. It's not just about making money. You also need to hold on to it. View savings as an opportunity, not a sacrifice. I get to save. I'm excited. By saving, you pay yourself first, and your future will show the fruits of your labor. Lastly, get some plans and work them. You will never get today back, so don't waste it on ignorance when knowledge is available. So let's give you some stuff to consider here. 7 things you need to do now. 1, connect with this message. I've given you 3 strong principles and I've helped you see the 3 types of income. Connect with it. 2, if you're working a job, use 10 to 20% of your income for savings and investing. This is how you make your active income produce passive or portfolio income. So I don't have to leave the job right away. What I'm going to do is I'm going to use this knowledge that I have and I'm going to start making that income by me passive and portfolio income. 3, connect with other people who have a wealthy mindset and avoid the mind-altering conversations of those who reject wealthy. There's always going to be somebody around you talking about, oh, that stuff don't matter. Get away from it. 4, teach others what you learn and teach them to verify everything. Everything that I'm saying, everything that you hear, don't turn your brain off and get excited. Verify it. Look it up. See if these tax codes and rates and all that stuff that I said is correct. Look it up. 5, when you are successful, meaning you have tried, find ways to pay it forward. 6, do not fear failing because in every effort is the seed of success. 7, don't be afraid to spend time, money, and energy on the things that bring you to the place called wealthy. Don't be afraid to spend time, money, and energy. These are 3 great resources that each one of us has access to because it's going to bring you to a place called wealthy. Well, listen, today I wanted to take this time and I took it to share with you these 3 types of income to help you understand how you earn it and where you earn it matters. You can't afford to forget this. You can't afford to not be connected to what is being shared on this channel because if you connect to it, it's going to turn your life and the generations you're connected to around. So I'm excited, as you can tell, to have shared this with you on today. I didn't get to read that in a book. I had discovered this and then I had to come and sit down and put together things that would help other people. And then I started finding a way to get away from things that would have me stuck and locked in. And then I started picking up books that made what I was feeling make sense. Well, I'm here to share with you today that you have got to make a decision. Am I going to spend the rest of my life only in active income? Or if I'm in active income today, will I find a way to use some of it to build portfolio and passive income? It is really your decision. It's your choice. You alone get to make it. And if you choose to make it toward investing, you're going to see the benefits come to pass. Well, subscribe to this channel, click that notification bell, give me a like. If you've got questions, comments, whatever, please leave them in the description for this video because I promise you there's some more great fiery stuff coming as we're going to help you build, live, and sustain a wealthy life. Be blessed. Have an awesome day. Well, I'm so glad to be with you again on today. Today, I want to talk to you about the 3 critical things that must be in place for an entrepreneur to be successful. If you don't have these 3 things, success will always elude you as an entrepreneur. Well, before we get to it though, I want you to do me a favor and subscribe to this channel. Hit that notification bell so that you know when we're putting up great content like this every Monday, Wednesday, and Friday. And sometimes we'll have some special things as well, and I want you to be notified. So hit that subscription on today. Well, listen, I want to talk about these 3 things that are necessary if you're going to be successful as an entrepreneur. My aim in life is to help entrepreneurs succeed, and you cannot succeed without these 3 things. These 3 things are critical. And the first thing that I want to address is credit. Every entrepreneur needs to have a path to a 700 credit score with great data points. If you don't understand how to get there, it is going to tax your entrepreneurial efforts. I have worked with so many entrepreneurs who have credit problems, and the reason they have credit problems is because they tarnished and destroyed their personal credit trying to raise up a business. So many of them, before the business could ever be sustainable on its own, had already wiped out their own credit worthiness. So when it became time to consider growing and expanding the business, there was no possible way for them to initially be a good guarantor of their own credit worthiness so that the business could move forward. So if you are going to be successful as an entrepreneur, you've got to have a path to 700 plus, and you've got to know how and have navigated that path in life. If you're not constantly watching to make certain that you maintain 700 plus, that you maintain good data points, you are going to constantly find the business suffering because of your lack of credit worthiness. So that's the first thing. If you're going to be a successful entrepreneur, you have got to have great credit worthiness, and I'm suggesting to you that's a 700 plus credit score with great data points. And if you would like to learn about those data points, I've got a video that I'm going to link, and I'll put it right here so that you are able to see that video about the data points. So that's the first thing. The second thing that an entrepreneur has got to have in place is the 3 things that makes a business idea successful. Number 1, you've got to know who your customer is. Number 2, you've got to know where they are. And number 3, you've got to structure an offer they can't refuse. There is no possible way that any business today is successful without these 3 things. Who is my customer? Where do I find them? And what can I offer them that they cannot pass up? Listen, I help entrepreneurs do this because I know that without you being clear on that, there is no possible way that you are going to be successful. Here's what happens. So many times I have talked to people who are all over the board chasing money instead of having a purpose-driven, mission-focused business. They do not have someone that they're trying to engage. They are not looking for that person where they have discovered that they are. They are not advertising where they know this ideal client is. They are not formulating an offer specific to that client. So because they have not brought their business down to this level, they're so broad, there's no possible way for the business to be successful. So that's credit and that's business. You've got to have the credit piece and you have got to have this business piece. You can't say, I'm going into business to do everything. You're going into business because you've got a solution for someone and you've got to know where they are, and then you've got to package that solution in such a way that they have got to absolutely, they will never pass this solution up. So that's the first two things. Now, this third thing is critical, and it's important because it involves the life of the entrepreneur. You have got to have a good internal relationship with three generations: the generation before you, your current generation, and the generation behind you. What does that look like? That looks like your parents, yourself, your children. Your parents, yourself, your mentees. Your parents, yourself, your nieces and nephews. You have got to have an internal resolve and good relationship. Now, here's what happens in life. Many people, just like my journey, have had difficulty in dealing with parent, or difficulty in dealing with children, or difficulty in dealing with self. And until you can come to a place of inner peace with parent generation, your generation, and your children or your mentees or your nieces and nephews generation, until you come to a place where you see the significant importance of all three generations. How do I relate to my parents' generation is critical to my personal success. How do I relate to myself, to my generation, is critical for my success. Am I at peace with myself? How do I relate to those coming along, my children, my mentees, my nephews, nieces? How do I see them? Do I see myself as someone who can honor those ahead of me, someone who gives them understanding as being humans? Do I see myself as someone who has forgiven themselves, has forgiven the parents, have come to a place of internal peace where you've resolved these conflicts that sometimes sidetrack our time? And for an entrepreneur, when your time is sidetracked and you can't focus, you're not going to be successful. Have I resolved what it means to be a parent to these children? Have I resolved what it means to have something important and credible that I should share with the next generation? So in life, you've got to see three generations and be able to have peace as you view them and deal with them. So again, I want to make sure you get this today, because I have been so blessed to have a life experience that has taught me something about all three, giving me the ability to put them together so that I'm able to help entrepreneurs succeed. Credit, we want a clear path to 700 plus with good data points. Business, we want to know who our ideal customer is, where we find them, and we've got an offer that we've put together they can't refuse. And then when it comes to life, we see three generations from a place of peace. We're not upset with and unfulfilled with our parents. We're not upset and unfulfilled in our own lives. And we're not holding grudges and frustration and all with those coming along. We see all three generations appropriately. Now, it is an absolute opportunity of mine to be able to coach and to help entrepreneurs succeed. In the description for this video, there's a link there to get a coaching opportunity to learn how to do this in such a way that your business, which could have already made millions of dollars, is able to come up out of whatever it might be seemingly stuck in and be the successful venture you saw it being. Well, I wanted to take time today. I don't know who this is for, if it's for just one of you or 5 of you or 10 of you. Get it. Take full advantage of it. Credit, the business, and your life. The three things, when they come together, CBL, when they come together in an awesome, powerful way, I guarantee you it's going to bring you to a place of success in your endeavors. Well, I'm so excited. I want you again to subscribe to this channel. Would please like this video and share it with someone else. Leave me a comment. It really helps me here and helps with this algorithm as we are looking to grow this channel. We were not on this channel for almost 2 years, and so we're just getting on here. So I'm really excited about what we're doing. I look forward to talking to you again real soon. And until then, I want you to live your best life and be blessed all day. Be blessed. I wanted to take a moment today to speak to you business owners who are looking to get your businesses funded. This process has been so misunderstood, unfortunately, terribly explained a lot of times. And what happens is we go for the small hanging fruit and things like COVID or whatever comes. And so many of our businesses are caught unprepared. So I'm going to share, there's in the description for the video, you can get this resource. There's additional resources there that are free that will assist you in doing what you should do properly. That's what we're all about here. And I want you to do me a favor. I want you to subscribe to this channel, like this video so that somebody else will be able to get this great information and the insights that we're providing here for you. So I want to talk about how you proceed. And so let's get started. So first and foremost, if you are going to be a person that is going to have a business that's going to be successful, there are some things that you are going to have to do. Building business credit and getting your business funded is a process that, when followed, will allow you to expand your business to successful heights faster than the average entrepreneur. Now, most of the people in my audience, if you're not careful, you're listening to someone tell you something, you don't need this, you shouldn't do. Listen, at some point, if you haven't done this, you're going to be caught needing to get the money that you can't qualify for. So you might as well do all the little things that you know to do, but do this for sure. So let's go into some of these things. Things that you need to get done or do. So first, register your business. It's important. Registering a business with your state is the first step you need to consider. When a business is established in such a way that it is state recognized, it's prepared to be used to the benefit of the entrepreneur. So you got to recognize it. You got to file it, set it up. Whether you're doing a LLC, a C Corp, or an S Corp, or whatever it is that you are trying to do. If you're using your own social, but it's a different name, then you're going to fill out a fictitious name, but you've got to do this in order. After you do that, I'm giving you a place that you can even go to, zenbusiness.com. I've sent a lot of people there. There are many places, but this is one in this particular document that I do list that I have used. Then you've got to register your business with the federal government. So not just your state, but with your federal government, and get an EIN, Employee Identification Number. This is done by going to irs.gov/EIN. This prepares for your business to operate in the state and country. Next, because you're going to be looking for funding. Now, if you're not looking for funding, then you can have your business address, your home, your apartment, your friend's house, whatever you want to do. But the moment you are interested in funding, you have got to get an address that is not your residence, and it is not in a residential community. I'm going to tell you exactly what happens. When you apply for funding, they are going to go online and search your address to see what it is. If it comes up residential, you are going to have some problems with getting certain types of funding. So, and I'm not talking about nickel and dime stuff where you can give a couple of bank statements and you're at risk and they charge you crazy interest. I'm talking about the stuff you should be qualifying for a legitimate business. So we're going to get an address. Now you can get a virtual address. That means that it's not that your business is operating in this place. Your business could be operating in your home, but you get a virtual address. And I'm giving you 5 places where you could go and get that done. Opus, iPostal, Anytime Mailbox, Regis, Alliance. You can go and get this done. Now, there are some additional things to get in place. Now, look, we're talking foundation here. You got to make a business logo, because this business is going to be legit. 2, make your business simple, one-page website unless you need more. Many places to do that. You go to GoDaddy and get the name, or you can do free things. Now there's companies that will offer you free websites, but you want to get presence. 3, get a toll-free business phone number or a regular phone at phone.com or eVoice. These are places. Why? Because your phone, number 4, needs to register with 411 directory. When you're looking for real funding, if you can't get the 411 directory, if they can't find you there, you will not get the funding. So this is critical and important. Number 5, you need to get a business email address that is your name at yourdomain.com. Now, one place where you can do this now is Google. Google will offer you an opportunity to do this, but if you have purchased a website, you can typically have an add-on service of an email address that makes the business legit. 6, find your NAICS or SIC code. You need this to open your business bank account. So you need to know what the SIC code is, and that is what service, what particular area is the business operating under, because funding matters a lot by your SIC code. This is how they determine a lot of this. So this is important. Now, we're still getting foundation in place. Then you've got to get a DUNS number. Establishing a DUNS number will allow the business to build credit history that will benefit further expansion. A DUNS number is a data universal numbering system. DUNS number is a unique 9-digit identifier for businesses issued by the credit bureau Dun & Bradstreet. It is standardized across global industry and trade associations with more than 300 million businesses registered. You can think of it as your business's social security number, except you must request one rather than automatically being assigned one. So you got to get one. You want to get this DUNS number. This is all, I'm giving this to you in the exact order that you need to begin doing these things so that your business is in the place where your business needs to be. Get registered with other business reporting agencies. This is critical. So, registering with Experian Business, there are 2 main places that people know, and a third one that's very critical that I want to make sure you understand. But Experian Business is critical for the success of your business, so you want to be registered there. Why? Because they are official Experian website and business credit reports. These business credit reports are not your personal credit report with Experian. This is specifically Experian Business. Why is this important? Because when we get further along, we're going to be talking about building the credit, and you want your credit reporting to Experian Business, to Equifax Business, and the Small Business Financial Exchange, so that you are building yourself quickly a way to get the funding that you are going to want. Number 2, register with Equifax Business. Similar reason. And then one of the best places to be registered is NAV. I recommend you sign up for NAV Business Boost, which at the time of this recording, you can get it for like $49 a month, but it is invaluable because they're going to assist you with this whole building process. They're going to inform you. They're going to tell you they're in the business of helping businesses who literally pay that $49. So they help you here. Then we want a bank account. The laws in many states require that LLCs, for instance, you have to have a bank account. And so you got to get a bank account. Now, I want to talk to you about getting a bank account. For your business, I recommend that you get a bank account with a 2 or second tier bank in your local area. What does that mean? That means you initially want to be banking with someone who is more to your region because they have access to programs. For instance, in my community, there is a bank that if you open up a business there, they immediately offer you access to a class that sets you up for funding. So you want to go to a second tier bank. You don't want to go to a national branch unless they're offering special programming at the time, like Chase or Bank of America. They're building all over the country right now. But unless they're offering special programming for local businesses, then you want to go to a second tier bank that is more regional and more interested in helping you with your funding. And final items before business credit and funding is create social media accounts for your business. So you want to have your Facebook page, your Instagram page, your Yelp, your Mantra, your Google business, your LinkedIn, depending upon what this business is doing. These are things you want to have. Why? I'm going to tell you what's going to happen is that if that website doesn't have at least 40 hits, there's going to be a hard time getting funding. If there hasn't been traffic going to what you're doing, it's going to be very hard to get funding. They want to see that you are literally operating. This is when you start talking about going after some real things and you want to set yourself up for it. And it's very simple to just go ahead on and set yourself up for it. Add your business to Yelp and establish business presence with Google, which is easy. Google My Business. Now, I want to go through some of this and then we're going to stop. But again, this entire resource is available to you in the description for this video. And here's a great time if you haven't subscribed to this channel yet. It's a great time to subscribe right now. But establishment of business credit toward cash funding. This is what we're doing here. So you got to get accounts that report tier 1. I'm a tier person. I teach tiers. I've created a tier system for credit cards and everything that I teach. And so when you hear me talk a lot, you're going to hear me talk tiers. So we need to get accounts that report tier 1. Starting your business credit journey should happen with those who report on net 30 terms. Here's a brief list of some small trade lines where you can start. And I'm giving you the actual link that you can click to actually go there. Business T-shirt Club, NAV, Office Garner, CEO Creative, Crown Office Supplies, Creative Analytics, DC, Shirtsy, Wise Business Plan, and there are others. Another real good one is WexFlex Online. And when I tell you, go there, get you 1 or 2 of these initially just to test the waters to see where you are. And then we're going to see. So we're going to get 5 to 10 tier 1 accounts added to the business credit profile. And it's very simple. I give you a laundry list, 28 of them. Then get 5 to 10 tier 2 vendors. And when I say 5 to 10, I'm really stretching you. You can do this with 2 or 3, but I want you to start thinking about, look, these are places where I'm qualified to go. And by having it and being able to manage it, it says something about me. I'm giving you a list of 31 in the tier 2. And then business credit builder accounts. Credit Strong, Divvy, and Self. This is not personal. This is business credit builder accounts. Then open up business credit card. First place you want to try is your local bank. And listen to me, many times when you open your bank account, it's the perfect time to ask them for your credit card opportunities at your local bank, just your local bank. But again, that's the first place to try. But here's some other ones that don't have any credit checks. And I've given you a list with links, 12 different ones that you can go to. Then there are some no personal guarantee credit bank cards that you can get. I've given you a list of these. The above accounts are a good place to start your business credit journey. Then you got to remember to pay on time. We talk about monitoring your credit, business funding and real estate financing options, business loans, other places. I've given you a full list, real estate investing, just so many things there that you can look at that are important and essential. But what was the focus point today for you is I want you to see the foundation of what is critical, what you must do. Now, this entire document is available to you in the description to this video. But in addition to that, I want you to come on and get on a journey. People who are having a great idea, you may as well allow other people's money to fund your idea. Why would you have to spend your money to fund your idea when you can set yourself up? And listen to me, in 3 to 6 months, there's a lot of things that you're going to be able to do because you've set yourself up appropriately. Now listen, don't fall for all the sham and games that everybody in the world trying to make a dollar is going to try to tell you. But listen to me, build your business foundationally correct. Do not fall for the trick. Build it. I'm going to tell you this as we let you go, but when the COVID crisis hit, so many business owners went to people who put false papers together so that they could get money. And so many of those people have run into problems after the fact now that the government is starting to say, okay, fine, let us see what you were really doing and what paperwork you really had. You don't want to be in that kind of jeopardy, so you want to set yourself up right. You want to have a perfect track record going forward. Last thing I'm going to share with you is there is a site called wave.com. It's an accounting site. You can connect your business bank account to it, and it will help you keep great accounting online. You can even use a part of it is free. So you can sign up for Wave and it be free to get yourself started. You've got to have good records because everywhere you go to get a loan, they're going to be saying, give us this report, give us your income statement, give us your balance sheet, give us some bank statements. You got to make sure that you've got this thing in place. And listen, if you do, there's going to be a yes after yes after yes after yes. Well, I tell you what, I've been so excited to share this with you on today. Don't forget to click that subscribe button and turn on that notification bell so you'll know when we put up great content like this 3 times a week. Something's going to be hitting on this channel, as my goal is to help you walk in financial freedom. And that involves your credit life, that involves your business, and that involves investing as far as I'm concerned. And so we're going to be talking about all 3 of those things here on the channel. Well, you be blessed. Have an absolutely awesome day. And I look forward to talking to you again real soon. Well, I'm so glad to be back with you again here on the show. This is Absolutely Financial Freedom with Dwayne the Success King. And listen, I want to share with you today, there is absolutely no way that a person with a proper credit score and the right data points can't get $100,000, $250,000 credit, or to get a business funded. It is just absolutely not possible. So today, I want to talk specifically about the credit score and the data points that you should work on to make sure that you can get the funding that you so desire. Well, let's talk about it right here. Let's begin first by discussing credit score. The moment your credit score crosses over 680, you've now entered into the preferred territory. So the credit lenders are going to offer you a little bit better interest rates and things of that nature. Now, what I teach in teaching people how to prepare themselves to get the levels of credit and funding that they may want personally and for their business is to get in the 700s. And so let's just say our goal is going to be 701 and above so that we can qualify. When a person gets to 701 and above, there are 5 things that you have got to make certain are extremely on point in your credit profile. For so long, we have been told credit score, credit score, credit score, and everybody wants a 750 or whatever. When in the reality that if you want to really build something sustainable, what the industry is looking at is to how have you built your profile, and that really encompasses the data points. So I want to talk about 5 of them that are essential and important. The first one is payment history. Now, one of the things that's important as it relates to the credit industry, they love to see 7 years of payment history, but they're going to focus on the last 2 years. Under the new FICO systems that have been put into place in the last 2 years, we are seeing a great focus on the last 2 years of payment history. Now, this is not just talking about whether you're late. This is talking about how you manage payments. So it's very, very critical as you get to 701 that you start looking to see what's been my payment history so that my data points are good in the area of payment history. Number 2 is credit utilization. Another way of saying credit utilization ratio is to say your debt to credit ratio. This means how much of my available credit am I using on my statement date. This is important. You've got to know for credit cards when your statement date is to really know your debt to credit ratio. Now, the system wants to tell you that 30% or below is where you need to be. I am going to tell you, because we want you to build wealth and we want to build it in the quickest way possible, you want to be under 10. So 9 down to 1 is where you want to be on statement date for credit utilization for every card you have. We want to see to it that credit utilization is under 10%, because this is going to give you the ability to continue to see that credit score increase and that profile be strengthened in a way that is extremely profitable. Now, number 3, they're going to be looking at the types of credit that you have. So they're going to look to see whether you have installment and revolving lines of credit. What's installment? Installment lines of credit are things like your car loans or your mortgages, things along that line, and the revolving are credit cards. And so they're looking at mix. All of this is really a part of the credit score. This is how strong, though, the credit score is. You can have a 750, but your data points be weak and you won't qualify for the things that you really want to build a sustainable wealth. So you've got to make sure, as it relates to types of credit, that you've got the right mix. So they want to see revolving and installment. This is what you build once you are at 701. Make sure that this is what you have got in place. Number 4, they want to see the age of your credit history. Now, age matters. The age that they're looking for is 5 years credit history minimum, meaning that when we look at your credit profile, we should see that you have accounts going back at least 5 years worth of payment history and activity on these accounts. If for some reason you are trying to go after something and the history is a problem, this is where I recommend to clients that you put a trade line on that will give you that kind of history in your profile. And in that case, there's certain lenders, funders, credit card companies that you want to be going to who will allow that trade line to count towards your credit history. But credit history is number 4. And number 5 data point is inquiries, hard inquiries. Now listen, you can't have more than 4 hard inquiries in a 2-year period for any one of the credit bureaus. Now, there are certainly some things that we show and we teach people how to remove inquiries so that they're not there, but these are the data points that they're looking at. You cannot build wealth with a great credit score and weak data points. You can absolutely get more funding to you and more credit to you with higher and better data points than someone who may have a higher credit score but doesn't have the data points. And so listen, I want you to know that we're here to help you get the $100,000, the $200,000, the $300,000, and the way we can get it done quickest is to make sure we've got a good score, but at the same time, we've got the data points in place. Well, listen, I want you to do me a favor and subscribe to this channel. I want you to do me a favor and hit that notification bell so that other people will find out what's going on here. Check the description for this video, and we are certain you're going to find something there that's going to benefit you in your journey. Well, again, it's been my privilege to be with you on today. You be blessed. Have an awesome, awesome day.